Evening. On what's brewing, education lending startup Propelled has raised $25 million via debt for Edgro, its wholly owned subsidiary, which is a licensed non-banking financial company or an NBFC. Edgro has raised capital from Credit Saison, AU Small Finance Bank, Incred Financial Services and Northern Arc Capital. Joining me now to discuss this further is Victor Senapati, the co-founder of Propelled. Victor, thank you so much for taking time out and being on Startup Street with us today. You know, Edgro was launched only in 2023. So what is the kind of opportunity you're seeing when it comes to education lending, especially in Tier 2 and Tier 3 cities, which is who you're catering to through this, right? So how are you making access to finance easier versus the traditional players? Take us through your offerings as well.
Hey, Arundhati, hi. It's a pleasure to be here. Yes, Arundhati, when we started, the whole idea about Propelled was, how do we democratize access to education? We identified financing as one of the biggest challenges in education. And, when we talk about India being a global powerhouse by 2050, we will, and when we talk about our demographic dividend, the demographic that we have has to really bring out some dividends, right? And that's where education comes in. And what we saw was that there are a lot of talented people in the country who are not able to get to where they want to because of a lack of financing. What we saw is that the traditional financing opportunities that are there, big banks that are there, they see financing as any other retail loan that's out there, like a personal loan, like a loan for taking a home. It's seen in a very generic way. But what we felt is that education has to be seen in a very different way. It has to be seen as an investment because honestly, that's what it is. When you invest in education, you start getting returns probably 4 years down the line, 5 years down the line, and that ROI has to make sense. And we started doing that. So we identified institutes which provide real good value to the students. And, we identify students who can get value out of the institutes, and we finance those students, taking into account what their potential, what their employability can be in the future.
All right. So you've raised this $25 million via debt to specifically grow the Edgro platform, right? So what kind of demand for loans do you hope to see in the next year? What's your current loan book looking like, and how do you plan to grow this further?
So we currently are at about a 700 crore loan book. Last year, we had disbursed close to around 1,200 crores. This year, we are looking to disburse close to around 2,000 crores. We are looking to go into multiple segments as well. We are growing our product. So, the liability side is is a 50% side, which people don't really talk about. People really talk about the demand side. As in, this is also another part where we have to solve for the segment. And this is just been a testament of our risk management practices. And the comfort we give to the lending ecosystem that we've been able to raise $25 million in just 6 months, and we hope to continue it further. We hope to get into co-lending arrangements with banks as well.
All right. So co-lending arrangements with banks is the way forward. But, give us a sense as to how both the businesses will work, right? What are the priorities of Propelled, and how does Edgro support the core business?
So, we have to think of Propelled as a, financial entity, as a fintech, which brings in the demand, which brings in the product. And we work with multiple lenders on our backend. And Edgro is one of the other lenders with us, which is our wholly owned subsidiary. Having Edgro with us gives us a lot of control and, allows us to innovate a lot on our product offerings as well. As in tomorrow, we feel that we want to create a new financial product for the student. Let's say something around a income share sort of product, or a product which works better for students with a certain sense of outcome. It's much more easier to build it at Edgro, which is our wholly owned subsidiary, versus taking it out to a bank at an initial level. As in, traditional lenders come in only when a lot of things are proven out over a period of time, and that's where Edgro comes in the picture.
Right. All right. So if you could quickly tell us, give us some color on the kind of technology that powers your platform. How do you aim to build your tech stack for better ROIs?
No, so the fintech entity that is there is a layer which connects, where there's a student-facing interface, and we work with institutes. At certain institutes, we integrate very deeply into their systems as well to get a lot of data. And powering all of that inside at the backside is an employability engine, which is the core of it. where, as I mentioned before, where the core piece of it is to be able to identify and vet institutes. Think of us as a Sibyl for institutes. So we identify which are the institutes which are doing things well, where placements make sense, where there's value, the costs are not too high, and then we identify students who can really take value out of that particular course. So the students' academic history is going to matter. The students' softer factors, their communication skill sets are going to matter. Their adaptability is going to matter, and whether they can be really successful at that institute. That's going to matter.
And if we could talk about Propelled for a little bit, what kind of revenues are you clocking on that front, and are you profitable at this point?
So we are close to profitable, Arundhati.
Okay.
We made close to around 50 crores of revenue last year. This year, we also have a target of turning, profitable. And as in this year, we are expecting our revenues to grow from 50 crores to about 80 crores and, turn profitable. That's the intention.
So you hope to turn profitable this year. But, before we close, do you expect to raise more debt for Edgro anytime soon? And is the Propelled side of the business well capitalized? You had last raised equity in 2022, if I'm not wrong.
Yeah, so you're absolutely right. We raised money from Westbridge Capital, and we have that money in the bank. We don't burn a lot of money, as in we are very frugal with respect to our expenses, and and that served us well. So we, with respect to debt raise, that's a continuous exercise, of course, and we need to keep raising capital, and we would be looking to raise more capital, get into co-lending arrangements on the debt side, so that we can innovate on products and reach out to more students. So those are things that are there in the pipeline.
All right. So looking to raise more capital there and more co-lending options with banks as well. All right, Victor, thank you so much for joining us on Startup Street, and we wish you all the best going forward.
Thank you so much, Arundhati. Thanks for having me here.